Part C reads, highlight 4 advantages of big data analytics in the financial sector or project finance. Advantages of big data in financial sector or project finance. What is big data? Now, big data typically is an umbrella term used to describe the vast scale and unprecedented nature of the data that are being produced. And big data analytics is the complex process of examining big data to uncover information such as hidden patterns, hidden correlations, hidden market trends, hidden customer preferences that can help organizations make informed business decisions. What are the advantages of big data? The first advantage of big data, this is big data analytics. Advantages of big data analytics. Big data analytics. What is the first benefit? The first benefit is in relation to fraud. Fraud detection. Fraud detection. Now, highly regulated sectors like banking and the finance sector attract numerous fraud attempts. And big data can be of great importance to such sectors since the analytics of relevant data sets can make it possible to have improved fraud detection as well as fraud prevention. And the big steps that have been made in analytics and machine learning imply that fraud detection experts and teams can identify risk factors faster and even more precisely. We know the finance sector is a highly risky sector where most fraudsters are attracted to. So big data analytics can help detect fraud. It can also help the industry to put in place mechanisms to prevent fraud. Number 2, the second advantage of big data analytics is better customer services. Better customer services. Now, the financial sector players can use big data analytics on various areas such as customer traffic and preferred products and feedback from various platforms to improve their customer services can be possible because of the analytics. And they can increase the number of cashiers, the vending machines, the seating space, as well as improve on other areas that customers may have given feedback on. So the idea is to have a more customer-oriented approach to retain many loyal customers and also to win others through referrals from the satisfied ones. That can be possible through big data analytics. It leads to better customer service or services. Number 3, big data analytics also enables products to be tailored. Enables products to be tailored. Products to be tailored to the needs, of individual customers. To the needs of individual customers. Big data analytics enables products to be tailored to the needs of individual customers through what we call customer segmentation. Individuals through customer segmentation. The fourth advantage is that big data analytics improves the reach of financial services by helping providers garner information they need without physical presence. This is expansion. Improves the reach of financial services. Expansion. The expansion of services to people who would not have been reached where it is not possible to have an analytics of data. So it improves the reach of financial services by helping providers garner the information, because you can only expand, you can only reach areas that you could not have reached if you have information that is needful without physical presence. Data analytics can help the financial sector, can help the financial institutions to get information that can enable them expand their services, expand the scope of or the jurisdiction in terms of reaching the customers. Number 6, we can also say that big data analytics changes the motivation, it helps to change the motivation and behavior. It can do what? It can help change the motivation and behavior of clients, such as using awareness of how repaying a loan can positively affect future credit applications of clients. It helps change the motivation and behavior of clients. Highlight 4 advantages. I've highlighted 6. 1, 2, 3, 4, 5, 6. Any 4 out of these 6 would earn you 4 marks. Part B, propose 3 reasons why residential real estate investment trusts are not popular. 1, 2, 3, 3 marks. Part 1, types of trade finance. Describe 5 types: cash in advance, factoring, working capital loans, forfeiting, supplier credit, bank overdraft or business overdraft. Any 5 marks. That is part A, B, and C.